Yeah, we tend to look at our investments over a 3, 5 year time horizon, and the average holding period in the fund is over 6 years. So when we back something and it works, we tend to stick with it and we look long term. We think that's where we have an edge. It's quite hard in the short term. But we could look at it on a risk reward basis. So, what's the downside and what's the upside? And where valuations are and the potential of many of the businesses we're invested in, the risk reward feels pretty good. There's a dividend yield of over 4% on the fund for us. The market's a bit below that. And then there's another factor at play. People have often said to us, well, if the UK market's cheap, what's the catalyst? And our answer is catalysts are for cars. You've got to be in it to win it. Because when this market starts to re-rate and attracts outside capital, we think shares could move quite significantly, and it will be too late to try and spot that trend and buy it. There are a lot of companies trading on single-digit PEs in the UK. These are really big, good businesses. And there, as I said, there is a buyer in town, and that is the companies themselves. So there's another 2.5% return from buybacks. We've got about 60% of the portfolio by value buying back shares in the past 12 months. So it's chugging along quite nicely on that basis.